Hey everybody, this is Jim at SP500chart.com. It is 1 minute after 4 on June 17th, 2014. Got to get this done pretty quickly because I'm rolling out of here in about 30 minutes. Before we get started, I need to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts, and it's interesting to see how these lines are working today. I made mention yesterday that it looked like we may have formed kind of a dip, a little consolidation pattern here in the form of an inverted head and shoulders. And just to point out where it would be, that would be the left shoulder, kind of a double dip. This would be the head, which itself is a little bit of an inverted head and shoulders. And then we have over here on this side yet another double dip for the right shoulder. This is the neckline. We broke out over the neckline after some initial weakness this morning, and then we fell back down to about 1935, which, interestingly enough, if we extend a trend line from the bottom of the head across the two dips on the double right shoulder, that lines up with there. So that's an interesting thing to point out. The other thing that's interesting, and I think this is where if there's a catch in this, I think this is where it's going to be. And that is, even though we are now over any interpretation of a resistance line that we could come up with on the chart for the last 6 or 7 days, the fact is we could not get over this green line today. So for this inverted head and shoulders pattern to work, the S&P is going to have to get over this line. I just think it is. Because if we don't get over this line and we come back down and we start testing this lower line, you know what I'm going to say? That runs the potential of being a rising wedge. Now, just to remind you, we are looking at an inverted head and shoulders pattern, not this little one right here, but we're looking at a much larger one that has a target of about 1990. And I mentioned in yesterday's video and also over the weekly review that we have some buy target lines on this chart. And they are these teal colored lines. This one is a 40% retracement from the bottom of the inverted right head back here in the third week of May. I think that, let me just double check. Yep, there we go. That's where our breakout is measured from. That's the bottom of the right shoulder. The breakout move ended when we got to about 1955. So if we pull back 40% to this line, that should signify a spot to buy. By the way, this line is pure conjecture, so I'm going to make it very, very light in color. The other buy line, if you will, is the line drawn from the, just a second, drawn from the bottom of the head. Let me go back to a 1-hour chart on this. There, that lines up better. A line drawn from the bottom of the inverted head across the bottom of the right shoulder. So you can see that if we tag this or this, that should be a buy signal. Additionally, there is a third signal, and that is a return to the neckline. John McGee states that you go long on the first of those three things to happen. So right now, if that holds out to be gospel, and it works as one would hope it would, then we are looking at we are probably not looking at a return to the neckline, because the 40% retracement is higher than that. Now I'm going to do something else real quick here. That now that we know that this is a top, and now that we've known for a while that we have two bottoms here, you'll remember that part of the struggle, if you will, has been to discern where are we setting up some kind of channel action. And I just noticed this on the chart. We know this is a good line. What happens if we create a parallel line to that? I just now realized that we have 1, 2, 3 touches on this top line, and 1, 2, 3 touches on this bottom line, and it would not surprise me if we end up at some point down in the 1920s where we set up the next leg up. And if we do it that way, then the fourth wave, if you will, here's one. Well, never mind. I don't want to. Actually, it would be the fifth wave. 1, 2, 3, 4, 5 could take us up to that 1990. Sorry guys, I'm in a little bit of a hurry because I really do. I want to try to get this done before I take off. So here you go. It looks like this little inverted head and shoulders pattern has broken out to the upside. And let me put my green line back on the chart. And just to remind you, that green line had its genesis just in these 2 points back here, so that may not be that solid of a thing. This line may not really be extremely trustworthy, just because it's defined by 2 touches that are a good bit in the past. So any little, you see, we could actually, if that's it, then we're above the line. If that's it, we're below the line. It just so happens that that is exactly where that trend line was drawn today, right about there, and we never did get over it. But let's see what happens. I'm still holding out that we could come up and tag this line, but in the event that we fail to do so and we start to sell back down, if we look at this line and this line, and if this is a valid set of channel lines, then a touch at some point in the 1920s on this particular line right here would not be the least bit unexpected. Like I said, we've got this would be a buy signal, and this would also be a buy signal. So we could be seeing that happen maybe the week of the 23rd, which would be sometime around the 1st to the middle of next week. Let's just see. It'll certainly be interesting. So guys, there's the video for June 17th, 2014. Thanks for taking time out of your day to watch this, and thank you especially for your very kind support.